Welcome to the Income Millionaire Insider July 2nd, 2018 update. In order to make real, life-changing money in the stock market, not a couple bucks just by scalping some money out of the market by trying to find some chart patterns, but to make real, life-changing money in the stock market, we need to invest in businesses helping the world get what they want and demand, and we need to invest in those businesses before all of the value is created. There lies the problem with many investors right now. Even if we're invested in companies helping the world get what it wants and demands, many of us have owned these companies for years, so much of the value these companies made for the world has already been created, therefore the stock prices have already moved up sharply. To make money in this very late-stage bull market, we have to find the new companies creating new value by providing the world what they want and need, but in the earlier stages where there is still a lot of value and therefore money to be created and made. The Income Millionaire Insider was created to address this exact problem while magnifying our gains by joining the union of people using their brains to get a better deal through the use of some simple options trades. Looking at the stock market reversal radar, which shows us that the underlying stock market moods continue bouncing around the bottom of the range after becoming very negative in the last 2 weeks or so. Much of the other data shows us this fear may reverse by the end of this week, and the underlying mood swings may start moving back up. Due to the overall stock market strength, the odds of the underlying stock market mood swings becoming significantly more negative at this point is very low. As many of the players in the stock market right now are very fearful, we can take advantage of their fear as we may be somewhere near a mood swing reversal to the upside. Not only do we have an edge being able to track the mood swings in the stock markets and take advantage of the markets when they're the most fearful, when the most people make the most mistakes, but we also can understand the bigger picture of what's happening on a global scale. As the United States continues to not only be the gold standard for the quality of life most other people in the world would kill to have, as we create innovations that change the world, the rest of the world wants those innovations, and thus the demand for industrialization and economic development of 2.5 billion people in Asia, Latin America, Eastern Europe, and yes, someday eventually Africa, and their demand for everything that we have as Americans that they do not. And this industrialization of the world takes energy in the form of cheap oil and natural gas. One company, in our opinion, is in that sweet spot right now, and that is Schlumberger. The ticker is SLB. Schlumberger is the world's leading oil field services company with operations in more than 85 countries. SLB offers products and services that cover the entire life cycle of oil and gas reservoirs, from exploration in the beginning of the process to production at the end of the process. Schlumberger's seismic technology allows oil and gas companies to almost see a picture of the ground so those oil companies can decide the best spots to drill in. Schlumberger supports oil and gas well designing, planning, and operations, including the monitoring and operations. SLB can even test these oil and gas deposits to make production more efficient. Most investors are afraid to invest in Schlumberger right now, but it's because the free information out there that shows SLB has negative net income because Yahoo Finance and other free sites are including one-time or discontinued losses which skew the numbers. The other mistake being made by most investors right now is they just don't understand that Schlumberger wrote off almost $4 billion in expenses in 2017, which due to U.S. accounting principles make Schlumberger look like it made way less money than it really did. Since we know how to properly evaluate Schlumberger and we know what to look for, SLB made a net profit of about $2 billion in 2017 and is forecast to make $2.8 billion this year and $4 billion in 2019. Once again, we found our favorite setup here. A company that is socially out of favor with much of the market, has an ugly chart that generally shows the prices getting beat up since January of 2017, yet only becoming more and more profitable. Currently selling for about $65 a share here. We would love to buy Schlumberger stock even lower at $63 a share. We can put a deal together with emotional investors who are willing to pay us to potentially buy their Schlumberger stock from them at only $63 a share. Looking at the July 27th, 2018 Schlumberger options chain, we can sell the $63 strike put option for about $80 per contract and instantly make about 1.2% just by pushing the button and using our brains to get a better deal. Since the expiration is only 30 days, if we did this trade each month for a year, we'd be making about 14% annually on this simple trade just for holding the cash required to buy 100 shares of Schlumberger stock, which today would again cost about $6,500. If the stock price ever does come down to $63, we're happy to buy it because we're really buying it for less because we're making 1.2% each month. We sell these put options and they expire worthless, and we don't get to buy the stock, although we'd be glad to. Let's look at how we would actually make this trade in our brokerage account. So let's look at the few easy clicks here to potentially make 14% here by buying Schlumberger stock for less than we can today. So here we are on the SLB options chain. We're looking at the July 27th, 2018 option chain, and currently trading a little more than $65 a share at the moment here. We're looking to sell that $63 put. We would love to be able to buy Schlumberger stock here at $63 a share. Crazy investors are going to pay us right now anywhere between $85 and $89 to buy it from them at that lower price. So let's click on the bid here, and it populates this top line up here. We can instantly do it and make $85, although you're probably going to want to put in a slightly higher price here and just let it sit there for a little while and see if you get filled. But let's click transmit. So yes, we want to sell one Schlumberger July 27th, 2018, $63 strike price put option, instantly making $85 per contract. If you want to make more money, go ahead and make more money and sell more contracts. But even one contract per month makes about 1.2%. If we do this for 12 months, we're making about 14% a year. So do we want to do this? Absolutely. We hit transmit. And there we are. We just made $85, 1.2%, or about 14% annually by selling that 63 strike price put. It's that easy. Let's look at Schlumberger a different way. Since we already know we would love to buy the stock, let's spend less money out of our own pocket and take advantage of a mistake being made right now in the pricing of these long-dated call options, otherwise known as a LEAP. Looking at the January 17th, 2020 options chain with about 564 days to expiration, we see the difference in price of the call option between the at-the-money strike of $65 and the in-the-money strike price of $55, which is the difference is about $6. Since the $55 strike price is $10 in the money, this is like paying $6 to get a $10 bill in return. We love this. I don't know how much longer this mistake will be made, but it's here right now. So instead of buying 100 shares of the stock in the open market, again for about $6,500, we can buy the $55 strike call option for only about $1,360, saving us almost 80% out of pocket. So let's save us about 80% of our cash here, and instead of buying Schlumberger stock outright, which 100 shares would cost us slightly more than $6,500, let's only pay about $1,340. So here we are, Schlumberger. We're looking at the January 17th, 2020 options chain. And check this out. I mentioned this last week, I believe maybe in the Intel trade, but let's look at what the price comparisons are between that $10 in the money 55 strike and that just about at the money 65 strike. So all the way over on the left-hand side under bid and ask, on average here, that price is what, $7.65 or 70 cents, let's call it. The going $10 in the money to this $55 strike price costs, about $13.40. So you can see the $55 strike price here is only about $6 more than the at the money call. So we're only paying here $6 to get $10 worth of being in the money, which is like handing somebody $6 and they hand you $10 back. This is an anomaly. It should not be happening in the stock market. Not enough people have figured out this mistake is happening yet, but we have, and you could take advantage of it. So I want to buy this long dated, this leap call $55 strike price, $10 in the money. So I'm going to click on the ask side here because I want to buy this call. And again, it populates up top here. Yes, for this sake, we're just going to buy it at the ask price, but you're going to want to put in a slightly lower price and get a better deal and just wait, right? No harm in having a little patience. So let's click transmit. Yes, we want to buy one, and you can buy more if you want, but we're going to buy one Schlumberger January 17th, 2020 $55 strike call option here. And yes, we want to do that. We're going to pay $1,380, which is about 80% less than buying the stock outright. We hit transmit. And there we go. We just bought 100 underlying shares of Schlumberger for $1,380 instead of spending a little more than $6,500. We just saved 80% of our cash by buying the option and not buying the stock outright. Not only can we save a lot of our cash for other good deals by buying that Schlumberger leap, but we can suck a ton of money out of the market in the short term here. Let's go to the August 17th, 2020 Schlumberger option chain, and we can sell a covered call. SLB currently trading around $65 a share right now. I'd love to be able to sell my Schlumberger stock at $70 a share, the same stock that I just bought for 80% off because I bought the call option and not the stock outright. Selling a covered call at the $70 strike price, in the click of a button here, we can instantly suck out about $78 out of the market per contract, or close to 6%. Since the expiration is only 46 days, if we did this trade 8 times a year, we'd be making about 45% annually on this simple trade. If the stock price ever does go up to $70 per share, we'd be happy to sell our call option as the stock gets called away from us because we'd make a killing on it. So let's use our brains and get a better deal. Let's sell some covered calls on that Schlumberger stock that we just saved so much money out of pocket on. So here we are, SLB, Schlumberger. Now we're looking at the August 17th, 2018 options chain. And I would love to be able to sell those calls that I just sold at the $55 strike. I would love to be able to sell it at $70. If Schlumberger stock ever got up to $70 a share by August 17th, 2018, I would be insanely happy. So here's how we do it. We are going to sell this slightly out of the money here, this $70 strike price, instantly making anywhere between $78 and $80. Compared to the price that we just paid to buy that Schlumberger option, again, about a little less than $1,300. With the click of a button here, when we make $79 or $80, we are instantly making about 6% with the click of a button. Yeah, 6%. We can make this trade on average 8 times a year, and we can potentially make about 45% annually just making this easy trade alone. It's so easy, so let's do it. We want to sell. This is a covered call, so we're going to click on that bid price. The spread is pretty small here, so you could just do this at the bid price right now yourself. We click transmit. Yes, we want to sell 1, and you can sell more if you want to make even more money. But let's sell 1 Schlumberger, August 17th, 2018, $70 strike. Call option, instantly making almost 6% with a click of a button and making about 45% annually. Yes, transmit. And there you go. We just made $78 or almost 6% by selling that covered call on Schlumberger. Again, we can do this trade potentially 8 times a year and potentially make 45% alone on this easy, simple trade. When we combine the put option strategy that we first discussed and the covered call option strategy that we just showed, together those two strategies are making about a 59% annualized return just for being smart, for using our brains to get a better deal, and without assuming much risk. These are our ideas, and as always, this is not investment advice. Please seek out professional help if you need it. We hope you enjoyed this July 2nd, 2018 Income Millionaire Insider Update, and we'll talk with you later.